You are listening to The Cost of Doing Business on TLV1. Welcome back. We are still with the story of the Shishinsky 2 committee. As we mentioned earlier, Israel Chemicals, or ICL, is now threatening to pull all of its investments out of Israel, or at least freeze them for the time being. In a message released yesterday following the committee's recommendations, ICL called Shishinsky's 2 conclusions a severe economic and social mistake that will force ICL to pull back its investments in Israel. It should be noted that ICL, as we said, and several of its subsidiaries, including Dead Sea Works, are expected to bear the brunt of this new tax regime. According to analysts, Shishinsky 2 might erase $140 million a year of ICL's profits. So is ICL's threats real, and how significant are they? With us is Gilad Alper, Senior Analyst at Excellence. Hi, Gilad.
Hi.
So you've been warning that ICL might take this move for some time now on this show and obviously in other places. So now that it happened, what happens now? Where do we go from here?
Well, ICL, as they said this morning, is freezing all of their projects in Israel, which makes, of course, perfect sense. I mean, part of it is obviously PR because they want to show the impact of what the Shishinsky recommendations mean. But also, look, when a company sees such a big change in the tax regime imposed on it, then obviously you need to take another look at all of your projects, recalculate the net present value, and see what makes sense and what doesn't. And it doesn't only impact the projects in Israel. Every project that is done abroad looks now a little bit different because it's going to be more attractive than projects in Israel. So, yeah, I mean, it makes perfect sense for ICL to take a deep look exactly in what they do. The problem is, of course, that firstly there's a lot of lack of clarity as to the exact calculation of the taxes and royalties, because there's a lot of missing data in the recommendations, specifically as to the assets on which you're going to take 11% return, whatever. And the second thing, of course, is that these are only draft recommendations. So it's probably going to take at least a month, probably more, before you have a final recommendations, and then the government needs to adopt them, and then maybe there's going to be a legal challenge. So it's going to be a while. We're going to see more uncertainty, but eventually, look, I mean, it's very, very clear that when taxes are raised, everything becomes less attractive from an economics perspective, and it makes perfect sense for as much expansion as possible to take outside of Israel.
Sure. A lot of the claims, a lot of the criticism that the Shishinsky 2's recommendations got was that the state is killing ICL's profitability, or the chances of ICL's profitability. Do you agree with this criticism that ICL might, the state has gone too far in taxing ICL right now?
Yes, I don't agree with the word killing. That's obviously not true. There's
not killing, but definitely hurting.
Yeah, well,
we're talking about a significant impact here.
Yeah, it is significant. And it's significant for two reasons. Firstly, if you look at the attractiveness of the share, forget about the company for a second, but if you look at the share, ICL is a potash company. So investors, foreign investors, and Israeli investors, institutions at least, look at ICL as part of a universe of potash companies. Now, the potash market itself isn't doing very well right now. The market is oversupplied, and I think it's actually very likely that the market is going to recover sometime over the next couple of years. But what's the point of being invested in ICL? Whenever the market recovers, most of the upside, or a big part of the upside, is going to find its way in the pockets of the state, not the pockets of investors.
Sure.
So investors will find it a lot more sensible to invest in other companies, in Potash, in Mosaic, in K+S, which is a German company, Uralkali, a Russian company. There's just no reason to invest in ICL. Sure. And that, by the way, also has a lot of impact on ICL's ability to finance expansion, right? Because your share is part of your currency.
But the shares have actually risen today. I think 2%. Last time I looked before the market closed, they rose by 2%. Earlier in the day, they rose, they rose higher, so at a higher rate. So. It seems as though, I mean, what happens? What do the investors think might happen that the shares are rising? That ICL might leave Israel? That their recommendations, the final recommendations, are going to be much easier than they were yesterday? I mean, what exactly happens in terms of the market, in terms of ICL stock?
I think investors have two things in mind. Firstly, is that you're going to have more certainty now, right? Because we've been through a full year of
uncertainty. So now we know.
So now we know. I think that's probably a wrong way to look at it, though. I think the market is mistaken in that, because we do have clarity, but it's a very negative clarity, as in things actually wasn't we had expected. And now we know for sure that ICL is going to be damaged very badly by the state. So I don't think that's a good reason for the share to rise, but that's what's happening. The second thing is exactly what you said, which is the market might believe that the final recommendations might be
less severe,
more moderate. And I think that's another thing where the market is mistaken, because I think the market is taking its cue from the previous Shishensky recommendation for oil and gas companies, where you had a draft recommendation and then they got softened. And I think the big mistake is that back then, the E&P sector, the oil and gas sector, was still in front of investing a huge amount of capex in developing the gas reserves and investing in more exploration. So the state had to maintain the attractiveness of the sector. So they had to be moderate. In ICL's case, there's no more potash to explore in Israel. There's no, large capital expenditure that need to be invested in the potash sector in Israel. So in theory, there's nothing that keeps the state from truly imposing confiscatory rates on ICL. So I think the market's somewhat positive response is misguided.
Okay, but still, taking all this, okay, ICL is definitely getting hurt here. It's definitely going to impact ICL in a negative way, in a major way. But can they actually leave Israel? I mean, 50% of their revenues, about $3 billion, come from Israel last year. So can they actually give up on the potash in the Dead Sea? They can't really give it up.
No.
They might develop projects elsewhere abroad, but it will take them some time to recover these revenues.
Yeah, of course. They can't leave because they can't take the Dead Sea with them. And obviously it doesn't make sense to simply shut down the operations in the Dead Sea because they're still going to remain profitable.
Very profitable.
Yeah, even after the accommodations. What they are going to do is manage the Dead Sea for cash flow, meaning you don't expand, you don't invest, other than maintenance capex. You don't do anything in Israel. You take all of the cash flow that you generate in Israel, and you simply invest it in assets abroad. By the way, they've started doing it already.
Yeah, they're already doing it.
Yeah, they're already doing it because I guess
how much can they even expand? I mean, okay, it's not just the threat of more taxation that led them to this. How much can you expand the Dead Sea? I mean, the Dead Sea is pretty much dead already. How much can you expand it? There is a limit to what you can actually take out of the Dead Sea.
Well, I mean, ICL has been planning for years now to build a sixth pool, right? They have 5 pools now, and they wanted to build a sixth one. And the sixth one would have increased the capacity out of the Dead Sea by at least 500,000 tons, which is not insignificant, especially in the profitability of the Dead Sea. But don't forget that potash is only part of the business. They have a vast, well, I wouldn't call it vast, but they have a significant business in phosphate, in brome, in
bromine and so on.
In other more complicated chemical products. They have a lot of business in Israel. I mean, don't forget that potash, in terms of its percentage of revenues, is only 50 or 60% of the company. Because it's so profitable, it accounts for something like 80% of profits. But in terms of the activity of the company, they have a lot of other businesses. And there's a lot of room for expansion also in Israel. Especially not in potash. Now everything is going to put on hold or cancel, because another thing that ICL needs to keep in mind, I think at least, is that who says that Shishensky committee is the end of it? I mean, who says that the potash market doesn't recover very nicely over the next 2 years, and then ICL all of a sudden does make a lot of profits despite those current recommendations, and then there's going to be more public pressure to take more money from ICL, and then the state is going to convince Shishensky 3. I mean, who says it's not going to happen?
It might happen.
Yeah, because, again, as a reminder, what we're seeing now, the Shishensky recommendations, only less than 2 years ago, the state increased royalties on ICL, which by itself was a breach of a contract that goes back to 1995, even before the Ofer family took control of ICL. So the state is a serial breaker of or breacher of contracts.
Mm-hmm.
So, I mean, if I was ICL, I would simply assume that this is not the end of it.
Yeah, it might not be the end of it, but to play Shishinsky's advocate right now. I mean, the claim was the reason that the Shishinsky committee was set up, and I agree with you that because more than 90% of the impact is actually going to be on ICL, it does seem like a committee to look into ICL's agreements with Israel, not just in general.
Yeah, no one believed otherwise, believe me.
Yeah, okay.
No one thought otherwise.
But it might be that there is an injustice here in the terms of what the Israeli public got for years and years of exploiting its natural resources. I mean, it might be that ICL does need to pay more. I don't know if 42% surtax is the right amount. Perhaps it should be more moderate, as you say. But, there is perhaps an imbalance here that needed to be fixed.
Look, I mean, how do you know? I mean, how do you judge? I think you can think about it in a few ways. Firstly, I think the best way to think about it is simply compare ICL to other potash companies.
Mm-hmm.
Most of the other potash companies in the world are all operating in, developed countries like Germany, Spain,
Ethiopia,
UK,
like ICL, in other
Ethiopia is very, very small. Russia, Canada,
mm-hmm.
so all of them developed, respectable companies. Well, most of them.
Yeah.
Now, all of them almost pay much less than ICL, and the only country that pays something that is similar to ICL is Canada.
Mm-hmm.
So this is one way to say that ICL is probably not paying too little to the
mm-hmm.
state because, as a matter of fact, they're paying more than almost any other country. The second way to look at it is that, there's a contract. The contract was broken already once by the state 2 years ago.
Yeah.
So when do you say enough is enough?
But what does it mean the contract is broken? Let's
mm-hmm.
The state has the right because the state leases its natural resources to companies like ICL. It owns it. It can change the contract. It happens all over the world. Even in these countries, in Canada and other countries, it happens.
Sure.
Yeah.
But what happened specifically
mm-hmm.
in ICL's case is that when it was taken private in the 90s, and to remind you, it was taken private and then bought by Shaul Eisenberg, a business person. Well, he used to be a tycoon in Israel anyway.
Yeah,
He's obviously
used to
deceased
be.
now.
Yeah.
But anyway, as part of the privatization process, the state, because they wanted to sell ICL's shares,
mm-hmm.
they made promises. And they made promises about this and that. And now that the market, 20 years later, the potash market is doing so much better than anyone had expected.
Mm-hmm.
And then the state is simply breaking the promises which were basically the basis of the company being taken
mm-hmm.
private. And by the way, this is very similar to what happened to the oil and gas companies,
mm-hmm.
right? Because Israel was desperate for people to explore for oil and gas
mm-hmm.
because it was such a big weakness point in the geopolitical, stature of Israel,
mm-hmm.
our position. So they decided on very favorable terms,
mm-hmm.
and then people came in, they were lured in, they found oil and gas, and then they said, oh, we didn't know you were actually going to find oil and gas, so now we're going to basically change the conditions.
It happens.
So, sorry?
I mean, it happens when you have a chance to profit. I mean, okay, I think countries can actually do that, and it's okay. But the question is whether ICL...
I tell you which countries
mm-hmm.
can do that. The countries that can do stuff like that is someone like Australia.
Mm-hmm.
Australia can victimize their investors as much as they want.
Mm-hmm.
And the reason they can do it is because they're so rich and so big.
And what you're saying is Israel is not rich enough. It doesn't have enough leverage.
Look, if you let's say a business person in the iron ore business, right,
mm-hmm.
and you go to Australia because the country promised you this and that,
yeah.
and then you do whatever you want to do, and then you're successful,
mm-hmm.
and then the state basically, turns around and says, okay, we actually lied to you. Now we're going to take more.
Mm-hmm.
What are you going to do?
Mm-hmm.
You're going to have to stay in Australia. There isn't another geography where
mm-hmm.
you can go and make more money, because where can you make more money than Australia? It's too rich. It's too big.
Well, the same question applies to Israel as well. Where can ICL go still, even if with a surtax of 42%, and be more profitable than what it has in its operations in the Dead Sea and so forth? I mean,
well, obviously it's going to take time, but as an example,
mm-hmm.
their potash business in Ethiopia could be very profitable, partly because the terms they're getting from Ethiopia
are much better,
so attractive.
But
they're not
is
paying any
it
tax
significant
for the next,
enough to rival its current operations in Israel?
That I don't know.
Yeah.
No one knows, because I think the due diligence of ICL is not complete there. We don't even know exactly how much potash they're going to be able to generate. But look, ICL, or to be more exact, the controlling shareholder of ICL, Idan Ofer, I think the way he needs to look at it, I'm not sure if that's what he's doing, but the way he needs to look at it is that he's got 16 years, right, until 2030. In 2030, the concession in the Dead Sea is over. Basically expires, and then whoever gets it after him is going to pay a huge amount to the state, and it's basically going to be a de facto nationalization. So he's got 16 years, and during these 16 years, you almost know that the state is not going to allow him to sell his holdings in ICL, right? He tried 2 years ago to sell to Potash Corp. The state said, no, I don't think they're ever going to let him do that. So he's stuck for 16 years. Now, the thing is, the way, again, if I was him, he needs to think about his inheritance, because he can't sell his holdings. He needs to think about his kids. What do you give to your kids when you reach 2030?
Something tells me they'll be okay.
Oh, well, yeah. Yeah. It's not that I
they'll be fine, but
he's got 16 years, realistically, to get whatever funds he can get from the operations in Israel and invest it abroad.
Yeah.
And 16 years is a long time.
16
you can
years
actually
is a long time.
build an alternative to the Dead Sea, especially because you have a lot of real assets that make a lot of sense.
Sure.
I mean, why stop with potash? I mean, why not invest in gold mines or in copper or in iron ore?
Sure. Well, we'll have to look into that in the future. Hopefully, we'll see what happens with ICL in the future, and we'll see if in 16 years you can actually build assets elsewhere. Right now, we have to wrap up. So thank you so much, Gilad Alper, for joining us.
Thanks, and we'll meet in 16 years.
Exactly. Well, that's a date. Bye-bye.
Okay. Bye.